Okay, so we're gonna go over the whole concept of how to journal. So guys, feel free to interrupt me at any time, um, and ask questions, yeah? So first things first, you want to obviously number your trades. I'll explain later why all of this and what's the reason behind it. So obviously the date is self-explanatory. So we can just say 11/01. This is just an example. I know the market is closed. Pair, you can name it whatever pair you want, gold. And then obviously, was the trade that you took, was it a buy or sell? Let's say sell. Entry price will be whatever, XXX. Stop loss will be whatever it is. Take profit.
For your stop loss, do you put the actual price or do you
Yes,
put the
the
number
actual
of
price, or you can
pips?
put the actual price or how many pips.
Oh,
It's
okay.
up to you. Okay. And then obviously take profit. I would recommend that you put the price when it comes to the entry price and the take profit. Okay. And then the position size, that means what is your lot size? Okay. Now, what I mean by reasoning is, say, for example, um, break a structure. Okay. This is how you're going to say, why are you taking this trade? I saw a break of structure and a retest on, say, for example, the 1 hour time frame. Okay. Exit price. mm, I'll go into that in a bit later, but we'll skip that. Your profit and your loss ratio. So say, for example, you made 80 pips. You can say I made 80 pips plus. If you don't want to write how much profits, just say I closed out with 80 pips, or I lost 30 pips, minus 30 pips. Okay. This is very important. Your emotional note. Okay. So on, I'm just gonna, off the top of my head, I'm gonna say when I took the trade, I was feeling confident due to all my confluences being checked. And I saw that the market, what did I go for? Sales was still trending downwards. But I was also feeling hesitant due to the fact that we had NFP happening, or yeah, happening in the next hour. This is just an example. Okay. Now, your lessons. This is basically where you critique yourself. Okay. So I'll say, I felt like I was consistent with my confluences making sure at least 2 out of 4 of them were checked. Although what I could have done better was wait for a close of candle on the 30-minute time frame and make sure the following candle pushes up first on the opening rather than down. This is your trading journal, guys. Now, why do I put the number of trades and the date? Because that will show you, as you fill up the journal, you'll end up noticing if your trades are getting less, that means your trades are getting more, how do I say, you're getting more of quality trades, okay? So say, for example, if you have 3 trades or 4 trades on the given day, that will tell you something. That will tell you, as a trader, I might be over trading, okay? Currency pair, why am I saying currency pair? Why do you put a currency pair? Because you might relate to a pair better than any other pair. That's the reason I put gold. Gold, because I've understood its behavior. I know it, okay? So if by any chance, if I took a trade and I lost and I go to the pair, it is not gold, I know the reason. I'm trading maybe GBP, JPY. You see? Okay. Why do you put the buy and sell? Because over time, as you will see as a trader who's better fit for sells, looking for sells or buys. You'll see that. Okay. Entry price. Oh, very important. Very important one. Um, okay. So sessions based on the pairs that you trade over time, when you start accumulating the data as well, you'll realize what session perform its best. Okay. Entry price is self-explanatory. Stop loss is self-explanatory. Over time, once you start realizing that you understand the pair better, you'll start realizing if you're a swing trader, you'll obviously notice that your stop loss is wider. And if you're a day trader, your stop loss is, more narrow. Okay. This itself over time will tell you whether you're more suited for swing trading or day trading or scalping based on that. Okay. Your take profit is important because that will tell you how long your tolerance in the market, how long your tolerance can withstand being in the market. Okay. So say, for example, you take profit at 10 pips on the same pair is maybe, I don't know, 20, 30 pips. That is basically telling you that one, you're understanding how the market is moving. Two, you're more patient with getting out of the lot size is the same thing. Okay. As you start, you'll start realizing, okay, I've been stuck at 0.01 for this long. I feel like with all this data journaling that I have, I feel like I would be able to increase my lot size. Okay. Your reasoning is basically in other words, is your confluence. Okay. What did you see in the market that made you confidence without even thinking twice? Okay. The exit price, I really do not. mm, It's the exit price is basically if it never hit the stop, your take profit. What was the entry? I mean, what was the price that you exited at? Okay, but the reason I put this is because this will tell you whether was the trade worth it or not. But this is further down the line. I would just ignore the exit price. Okay, your profit or your losses is self-explanatory. Emotional notes is, like I said, it's very important. Why did I put this here? It's because, say, for example, you took a loss on whatever pair, and then you come back to it, and then you're journaling, and then you said, "Oh, I had a shitty day at work, a death in my family, God forbid. I'm sick. I'm not feeling well. I was rushed into the trade. I was driving while I took the trade. These are the things that you need to put in on these emotional notes. So say, for example, if it was a good trade, you say like, okay, I had 8 hours of sleep. Um, work was good. A very good workout. I came to the chart fully relaxed, marked out my charts. The chart was looking very crystal clear. I knew where the market was going. And then obviously lesson learned is basically you critiquing your own self. And trust me, that is going to be very hard because you cannot lie to yourself. You need to be very honest with yourself. Because as time goes by and you are data and as you read through it, you will see you as a person, as an individual through the market, you are going to change. That lesson and that emotional note will tell you whether you are living a healthy lifestyle or not a healthy, you are being not true to yourself when it comes to the lessons. So these last 2 points are very important. You need to be 100% honest when you write these two. Yeah, that's about it, guys. If you have any questions, please do ask right now.
Can I recommend add one more thing?
Yeah, go ahead.
Risk to reward.
Um,
And then the reason why I say that, sometimes, people are trying to get a 1 to 20 risk to reward. But if you're great at getting a 1 to 3, a 1 to 5, that's I don't want to say the average because I don't know what the actual number is, but
yeah.
that definitely helps with if you get more wins than losses.
Makes sense.
That will
Yeah.
yeah. And if you see that you are great at getting 1 to 3 and 1 to 5, then that's something you probably want to continue shooting for 1 to 3 or 1 to 5 risk to reward.
So to elaborate more on what Kim said, and yeah, that's a very good point right there. Your risk reward will obviously maybe at 1 to 1
You
and then build up eventually. Uh, but there are gonna be times where and then realize, okay, my entry is not good. I didn't realize that my stop loss was bigger than my take. And that to summarize it for you is your risk reward. And then over time, with a certain pair, you'll start realizing, like for me with gold, I know for a fact that every trade that I take in the minimum, I can get 1 to 3, 3 to 1 risk reward. Minimum. And you're only going to know that through obviously your entry price, you take profit. But thank you for that, Kim.
Now,
Yeah,
I have one other thing, right? So,
yeah.
and traders are different. And if you meet
Mm-hmm.
a lot of mentors, they will also say the same thing right now. So, people, like I said, people are different, right? Some people value
Yeah.
percentage wise, why some people value risk to rewards wise, and why some people value like weekly target or goal, if I should put it that way. So it's three
Mm-hmm.
things, right? It's three different things. You have to pick which one you want to like work on, either the risk to reward, the
Yeah.
percentage wise, of course, of your account. Like this week, I just want to raise my account with by 1% or 2% or something, and you can just take one trade and you get that percentage, and you are done for the week.
Yeah.
And risk to reward, like of course, every trade you are taking, then it has to be that risk to reward. You have to know which one is best for you and how you can
Mm-hmm.
grow your account. It could be the percentage wise, like, okay, my goal this week is just to make 1% of my account or 2% of my account, then I'm done for the week.
Yeah. Yeah. 100%. I agree with that.
Can I also can I say something? What
Yeah.
about the time? So, for example, how long you stayed in a trade for? Would
So
that be in a situation?
the time is basically almost the same as your entry, your price, the risk reward. Okay.
Okay.
I mean, it's not really that essential because at the end of the day, the only time we look at time is our session. Okay. So say for example, which is a very good question. And if you want, you can add this to your journal where you put a time session. So say for example, for me, um, I only look for trades in the first 3 hours of London or the first 3 hours of New York. If my setup doesn't show up there, I'm not taking a trade.
Oh no, what I mean is like for example, this trade took an hour, or I held it for 2 hours.
No, I mean, you can put it. See, this is a baseline that I'm showing you right now. Is this Michael, by the way? Who is this that was
Yeah, it's me.
asking?
It's me.
Okay.
Michael.
So what I'm showing you right now is a baseline. I mean, I wouldn't say baseline, but it's more of this. These are points that have to be in a journal.
Okay.
You can add up on it. So if you feel like the time is relevant for you, by all means, add it. If you think you're going to benefit from it, from having a time, yes, go ahead. Because at the end of the day, it's called a journal. You see, you're putting your thoughts and whatever you feel like is important into that note. You see?
Yeah. No, I'll add it to my own personal one, because
Hmm.
sometimes it gives me an idea of how long I held a trade for. Maybe I held it for too long, that kind of thing. If I
Okay,
fail, that kind of thing. But yeah, I get it. Thank you.
no problem.
I have a question. Your journal analysis, is it all just manual? Like I just look at it and read through it or are there tools out there that can
I mean, there are tools. There's a lot of tools you can use. Notion is one of them. Um, you can use Notion, and with the benefits of Notion, you can lots of your initial setup, what you see, and then a before and after of how the trade went. So those are the benefits that you can use. I mean, you can see those are for people who are more visual, you see. Um, but for me, I'm old school, so I like using your sensors, you're looking, you're feeling, you everything. You
I
see?
was, I was also going to say, yeah, I think visually, like if you also do a screenshot and then put everything this journal either on your screenshot or attach it to the screenshot, then you can always just kind of go back and look at it to know what you did wrong, or if you understood what you did wrong, and or write, either way. Then you'll just have, if you're a visual person, you'll have that visual picture of your trade that you entered.
And also, Kenya, for you, I know Nuoff kind of glazed over the exit price or said that it's for later, but for you, that's very important. For anybody who's trading swing, because all of you people who are trading swing, all of y'all always have an entry, y'all always have a stop loss and a take profit, but 99% of you never see a take profit. You always get out.
Yeah, that was gonna be my question. What if you did just take partials and you left some
That's the problem. That's exactly why you keep track of that stuff. Because y'all always realize your stop loss, but 99% of you never realize your take profit.
Then that's one of the reasons, and thank you for that, Todd. That's one of the reasons why I put an exit price right there, for that main reason. So your take profit minus your exit price will tell you where you the most comfortable at. So if you put a take profit of, I don't know, 100, but your exit price is 80, and you're comfortable with that, then next time when you place a trade, that's where you should be aiming for. Or say, for example, you've seen on EU, the EU will move 30 pips, and then we are expecting a reversal after 30 pips. You wouldn't know that unless you have data, because say, for example, you put your take profit 20 pips above your 30, and then you notice that at 30 pips, you exited, I don't know, within 28 pips. Then you can just minus that and see, okay, this is the total move of a swing on EU on a 30-minute. You see? So over time, once you start writing this, and if you do, and if you guys want, I can sit down and we can go through all of this, and I'll tell you what are the benefits of it, and I'll make you realize what is right and what are you doing wrong if you already don't know what is happening. Any other questions?
I have one more. I like how you said this is a baseline. I think this is excellent. My question is, if I want to add a second position to a trade, that as a separate trade, or
Yes.
should I? Oh, okay. Okay.
That would be trade number 2.
Yep. Okay. And then my reasoning would just be trade number 1.
Yep. And
Yep.
then
Okay.
your reasoning would be like, okay, I saw a break of structure. I feel like
Right.
it broke previous day's high. I feel like price is gonna go higher. It's fine.
Okay. hmm Thank you.
You're welcome. Anything else?
This is perfect.
Okay. Then I guess this concludes the journaling session. And then, oh, hold on, we have a question. Okay, no, we're good. All right,